Hey, welcome back. It's hour two. It's the bonus hour. It's after hours. It's Women Wednesday is officially ended because that's hour one. And we're going to follow it up with a powerhouse full of men and women for hour two. And down on Wall Street, the New York Stock Exchange is experiencing some serious difficulties, down just about 600 points. We were up 400 yesterday, so we're down still net 200 on the last two trading days, which is not a good sign. I know I often say stay careful, stay nimble, stay wary, stay alert, stay closer to cash if you can, because things could get a little uglier before they get prettier. We broke it down with many guests today talking about, is there a recession? Well, you know what? The numbers are still great, and that's looking backwards. But looking forward, Frankie thinks the president blinked by pushing off these tariffs till December. It's probably no coincidence that that was a contributing factor to the uncertainty that the markets are feeling right now. And we're down about 600, and I'm not happy about it. But stay alert, stay nimble, and stay Frank in it. And Frank joins me again as we start hour two. Frankie, what a Woman Wednesday you put together. Thank you.
Well, John, our next guest is no woman, but does know a thing or two about the economy and the markets. And a lot of people are attributing today's stock market sell-off not to the tariffs, but to what's happening in Europe. So who better to go to than Simon Constable, who is in Europe, from what I understand right now. He, of course, is the author of the book, The Wall Street Journal Guide to the 50 Economic Indicators that really matter, from Big Macs to zombie banks. Hello there, Simon. Thanks for coming on Liquid Lunch.
Thank you for having me. Thank you, both of you.
Of course, Simon. Thank you so much. I've been talking about the markets. My background is in short selling, so I always kind of take this contrarian view of the markets. I'm rarely a markets up, individual stocks up guy. But I thought I saw a lot of macro indicators a couple years back when Trump came in. The market seemed to adapt some of those as tax cuts and jobs and growth came into the market. But now your book, the 50 Economic Indicators That Really Matter, what are you seeing in those, and what's your outlook on where we stand today, down about 600 as we speak?
Well, let's, first of all, before we start to go into detail about this, just remember that the economy and the stock market are related, but they are related like cousins, not related like identical twins. What's going on in the market is largely to do with earnings of companies, and that the projection of those earnings for the companies, and the economy is something slightly different from that. Sorry, I just mentioned knock over my water there. So those two things are very important. So what we've got in Germany, Germany's economy shrank in the latest 3-month period that they've got data for, which is April, May, June. It shrunk by 0.1%, still up on the year, but there's the worry that the fourth largest economy in the world, which is Germany, might start to go into recession. That would be bad. Britain is already slowing down. That's the fifth largest economy in the world. And this adds onto what you've got with the trade war, the on-off trade war between the US and China, the two largest economies in the world. So those are the data points that people are looking at. In general, though, yes, you're right. Unemployment's very low. It's very low pretty much in the US and in the UK. It's certainly lower than it was in Germany and France. But as you know, the market looks forward. So the latest data is pretty good. But the worry is that, are things going to get a whole lot worse?
I talk a lot about how the market hates, what I think the market hates most is uncertainty. And there's word also coming out of many of the big global banks that those in Europe are now actually charging people negative interest rates just to keep their money in safekeeping in the bank. Is that a contributing factor to these fears that we're seeing right now?
Well, the fears about negative interest rates are a very important point, and you make the point about uncertainty. So let's deal with the uncertainty first. One of the things, as Frank said, Donald Trump blinked on the tariffs. He's going to delay that, but delaying it actually doesn't get rid of the uncertainty in any way. It's still, what'll he do tomorrow? What'll he do the next day? That uncertainty on the trade will not go away until a deal is struck with China. that is absolutely simple. Who knows? It could come back next week. It might be postponed right up through the end of the year. We really don't know. So that's a very important thing to worry about, especially when you're talking about the two largest economies in the entire world.
Yeah. And then you throw in Germany, the fourth largest economy. We see them shrinking. We see global shipments are, just trickling down or not growing as fast as they were. With a capital markets background, I cannot for the life of me understand how banks can charge people to leave their money there. It's like you're paying them to be a security guard to watch your money.
It's a very strange thing. I've written about this for a number of publications, and one of the things that doesn't really make sense is why would you even put your money in the bank when that happens? We also know that when that does happen, you have negative interest rates, as you had in Sweden. A very interesting study authored by a number of authors, including the former Secretary of Treasury, Larry Summers, noted that the economy in Sweden shrank relative to what it would have done when they had negative interest rates, and loan making went down, which is exactly what a bank's supposed to do. So it absolutely acted in the wrong way for the Swedish economy, and you've got to believe that it's doing that already for the German economy. And if the U.S., as Greenspan says, does go into negative interest rates, which it could, then will that help shrink the economy as well, which would be bad. But let me get back to the Germany thing. Germany has a lot of manufacturing. All manufacturing around the entire world is linked. No one country produces something, you don't pour steel in one end and get cars out the other end. You have lots of components all over the place. And so all of these manufacturing economies are linked. So when Germany's economy is slowing down, you've got to believe that those manufacturing plants in the Midwest are slowing down too. That's, I guess, part of the worry within all this.
Simon, if I can ask, we're seeing, or at least we have up until today, a lot of investors move towards gold to take a little bit of a safe haven from the uncertainty. Is that something you see continuing going forward?
As long as investors are scared about what's going on, and as long as they see uncertainty and possible inflation going forward, then they will continue to get into gold. It's, as I mentioned on a radio show that Frank is intimately familiar with the other day, it's a barometer of things bad. Remember the barometer on the wall of your grandparents' house? It goes up when the air pressure is low or high. Well, gold prices are a barometer of worry in financial markets, and it's a very good one. You wouldn't buy gold en masse unless you were worried about the value of paper money and lots of other things. And that's what we're seeing now. It's gone up an incredible amount in just a couple of weeks.
Simon, also, many have started to, many have said for years that gold is always a flight to safety asset, that you're going to have something hard in your hands, like a hunk of gold if Armageddon comes. But Bitcoin, over the last couple of weeks, seems to be acting in like a reverse correlation. The market's down, Bitcoin's up. Are people also using Bitcoin, some people, as a flight to safety?
I'm sure some people are using it as a flight to safety. Here's my concern with Bitcoin. There really are two major concerns. One is we've only really had 10 years of Bitcoin. And for that reason, we can say that we've never seen how it's going to behave in a crisis price-wise. We know what gold will do. We've seen it happen over the last 5,000 years. Some of those years have been fairly well documented. We haven't seen that with Bitcoin yet. The other thing is, no one loses a 400-ounce bar of gold. They don't walk away. They're heavy. They're hard to move. People are always losing their Bitcoin. They're getting hacked. They lose the code to get it back. And that's my other concern with it. But yes, people are using it for that reason. You say the safe haven reason. So yes, inversely proportionate to the drops in the Dow.
Simon, we have to take advantage of the fact that you're in the United Kingdom. We're getting closer and closer to that October date that is the deadline for a hard Brexit. The new Prime Minister of the UK, he seems to be gung-ho, damn the markets, full speed ahead in terms of going forward with this Brexit. Is that likely to happen as we stand here now? And what effect is that going to have on the global markets?
It's going to be interesting. I think this is all part of a negotiation tactic. I mean, one thing we have seen persistently and consistently with the European Union is that they don't do anything until the last minute. If you remember the Greek crisis back a few years and the bailout of the Greek government, that wasn't dealt with until the very, very last minute. And the markets were jittery all the time. We called it the Moussaka meltdown when I was on staff at the Wall Street Journal. That happened a lot. And I think that's what we're seeing here is that there's going to be this wait until the last minute and then get something done. There's one sticking point. It's the border between Southern Ireland and Northern Ireland, and whether that needs to be, manned with troops or border control people or not. And that seems to be a big sticking point. If that gets fixed, I think everything else gets fixed. But I don't think it gets fixed until maybe the day before. What's going on, because both sides are going to take it down to the wire. So expect more volatility. Will Britain leave the European Union without a continued trade deal? It's possible. Is it probable? I don't know. These are interesting times. I mean, they say may you be cursed to live in interesting times. But in our business, interesting times makes great news, great TV.
Yeah, well, you are certainly great TV for us. You mentioned Greece in there. And going back to the crisis, we had Portugal, Italy, Greece, and Spain. They called them the pigs back then. We want to have you back on another time and talk about if the pigs are in danger again as well. But I want to thank Simon Constable for joining us today on Liquid Lunch. You stay right there. We'll be back in 2 minutes.